Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Martin Saenz, and hopefully I did not butcher his name. Martin brings social good into smart investing. He's a managing partner of Bequest Funds. He's renowned as a thought leader in the mortgage note investment industry. And Martin is generous with his first-hand expertise to the benefit of his many clients and followers. I also read his book, Cash Flow Dojo. He was gracious enough to send me a copy, and it was great. So welcome, Martin.
Alpesh, thanks for having me on.
Absolutely. So the first question I ask every guest, and it has to be something funny or interesting. Tell us something funny, strange, or interesting about you.
Oh, okay. Let's see. Outside of being a workaholic, outside of being a family man, I'd say I wake up at 4 a.m. every morning and work out at the gym. So
That's
I kind of
awesome.
have a routine going on. I have a money tree in my office, so that's and I care for that money tree. I water it, I adjust the branches. And so somehow I'm like spiritually connected to the money tree as I'm trying to grow my business. So it's kind of like a quirky thing, but if that passes.
So this is from where you get all your notes.
I didn't need a note tree for that. Yeah.
But you and I share something common, not on the money tree side, but I used to wake up at 5 a.m. Before the lockdown for years, and I would go to the gym. First thing, I'm 6 a.m. I'm at the gym because I'll meditate in the morning, and then I'll hit the gym. And I'm there from 6 to 7:30, get the workout in. That was my first thing every day. Now that everything closed down and kids are at home, I wake up at like 6:30 because they all sleep late. But now I built a gym at the home, so I didn't have to drive. That was another thing. So everything is at home. But yeah, that's great. That's awesome. If I wish I can wake up at 4.
Are you going to be able to flip the switch at a certain and get back to the gym when things open up?
Yes, but I think I may not go back. I would want to, but I got everything at home, including squat rack, you name it. So the things I used to use, because I love squats. I have weights, barbell, and I love pull-ups. So I have all of that now. I think they will start back up. I saw the email in a month or so, but I'm not sure.
Well, I think that says a lot about your level of discipline. So I like to go to the gym, and I have a personal trainer, so I follow her around like a little puppy dog.
And I used to do that when I started about 10 years ago, because I had never worked out, right? So of course that happens. And then I joined a CrossFit gym where I was following more group classes. And then I started, once I learned that, I think last 3 years, I haven't had any group coaching or trainer. Now I know what I want to do every day. So, but yeah, you got to get workout in either way, with the trainer, group class, whatever works for you.
Sure, absolutely. Because the rest of the day is mental, right?
Yes.
I mean, you're just kind of pounding away at different activities. So you
Agree.
need that physical side to things.
Yeah, it gives me a whole day. I'm always energized and motivated because I have got that thing out of the way, right?
Mm-hmm. Yes.
Hey, so let's talk about government contracts. And because you mentioned in your book as well, when I read, it was pretty interesting because government contract was your bread and butter. That is how you build the wealth, and then you started moving that wealth into notes. So what are government contracts and how do you find them?
Yeah, so in 2004, 2005, my wife and I were researching different business models as we knew we wanted to do something for ourselves. We wanted to be self-employed. So we were living in the Washington, D.C. area at the time. So we started a government contracting company that was geared to sell directly to the federal government. And what we learned is that, and that was our sole focus, was to sell to the federal government on a prime level. The one thing we learned is that most of the people that sell to the federal government, they sell as like tier two or tier three players, and they're subcontracted under the prime contractor. So the significance of that is that you want to be set up as the prime contractor because you have closer proximity to the end customer, which is really where the gold is. That's the golden goose, so to speak. Because when they're letting out new contracts, you want to be in line and have that relationship built. As far as as far as kind of working your way into the federal system, for one, you need to have a good system by which you're gonna write proposals. So you need to have a good library, a good assembly line approach of different content, different graphics, and you need to be able to assemble that together along with competitive pricing. So have that machine in place, and then also you need to have a marketing arm as government procurement officers and whatnot. They're always looking at your website. They're making sure that all your codes are up to date, because you need certain codes in place to sell, to be able to offer your goods and services on different products that they need.
Got it. So it's similar to, and because I had a IT consulting firm, we used to get contracts as well, and we actually tried to work with government directly, and we had to go through prime vendor. Now that I could relate, because they said, oh, you can't, because you don't have this, and you have to go through a prime vendor, and it just didn't work out. But I'm able to relate to it. So
Yeah, if you have like if you're a minority business owner, a woman-owned
yes,
business owner,
that's
and
what
you
we
have other
did.
designations, small business designations, then you really need to get yourself set up with the 8A program, or if you're a veteran-owned business, service disabled veteran, have a hub zone set up. So you need to take advantage of these avenues by which you can play at the prime level. And we did that eventually, but we started out just going head to head with some large prime contractors. And at the end of the day, if you really want to advance in the federal space, you have to be very aggressive, and you have to say, look, I am as good, if not better than the prime. I'm better on pricing, I'm better on service, and just give us a chance to prove ourselves, even if it's with a micro purchase to start the relationship. And that's a credit card purchase for those that may not know.
That's a great advice, and that's exactly what we did, my partner and I, in our IT business, not with government, but with other corporations. When we started working, we said that we are same or even better than PwC's and Deloitte's, because we were competing with them, E&Y, because we have the same talent, and I was ex-PwC at that time. So that was our selling point, and we were pretty aggressive with pricing. We were always showing 50%, less price than those guys. So that does make sense. So, but what process did you go through when you decided to do this? Right? Was there? Did you have a mentor or something, or you just figured out on your own?
So we actually figured out on our own. We bought a bunch of equipment ourselves. We were a custom fabricator. That's how we kind
Oh,
of
okay.
entered into the space on the art and exhibit side of the fence. And what we did is we were kind of snubbed by our peers in the industry because they were much larger and they had been doing this for decades, and we were kind of new
Right.
on the scene. However, when we pushed through with a few contracts with Smithsonian and the Pentagon was our large contract for a number of years.
Nice. Wow.
Then that set the stuff for these entities. Then you're good enough for everyone else. So that would be my advice: is if for anyone going into the federal space, government contracting, go right to the head, the top. What is the most respected entity in the federal government, what's the most respected agency you would give your left arm to be contracted with, and then go and figure out a way, go get to know all the people involved at that agency that you need to talk to, all the heads of departments, and do your outreach and try to hustle for that opportunity. Because once you get in with that outfit, then you'll be good enough for all the like tentacles, all the military bases around the country and so forth.
Got it. So, and how can you win the contracts if there is a, because I see I'm also part of that SPE thing, small
Mhm.
business thing for California, and we were trying to get MBE designation for federal. We never got to it, but because my business partner, who is a very close friend of mine, is an African American, and so we should have been able to get to that, but we never did. But let's say even if you had the designation, how can you win the contracts if there is a bidding process or there is a competition?
Well, with some of those designations like 8A, it's a sole sourcing designation. So the government can sole source to you, which means essentially no competition, up to a certain amount given the NAICS code that you're bidding under. So that's the thing, is that as long as you can prove that you have the capabilities, and then it may meet their small business goals from a procurement standpoint, then you may have an opportunity to use your socioeconomic designation to get in for a project.
Got it. So that's great. So now you are doing really good in the government contract. So when did it strike you that this is not what you want to do and you want to move into real estate?
So in '08, my wife and I, we started accumulating commercial spaces and residential properties in the DC area with our profits. We, every bit of money we made, we went out and bought new
That's
property.
smart.
And yeah. I mean, I've done 100 things wrong, so I'm just giving you kind of like the few things I did right. but at the end of the day, in 2000, early 2000s, we started having a family, and I realized 100-hour work weeks was not for me. And I also realized that through landlording, I wasn't meeting my financial aspirations that I was looking for in terms of passive income. So I still manage and own the properties. It's more of an annuity play, but we sold the company in 2013, and I had capital and I had time. And one thing I said is I want to work for freedom of time. Whatever it is I'm doing next, I need to build more time, more quality in my life versus like 100-hour week kind of thing. And that's where I stumbled into note investing.
Got it. And no, that is great. So what was your very first note investment?
Yeah, so it was purchasing 10 first mortgage notes in the state of Ohio. So these mortgage notes, my roots in the mortgage note investing space is on the distress side. So what that means is buying mortgage notes whereby the borrower has not made a payment in 4 or 5 years.
And do you buy primary or secondary?
These were first.
Okay,
So
this
when
was
I
first.
first started buying distressed non-performing mortgage notes, I purchased first mortgages, senior mortgages that were non-performing, and what and I paid retail pricing for those out of the gate. So overpaid, bought crappy notes
And you bought
associated
10
with
for the
crappy
first
property.
time. That's amazing. Like 10 for the very first investment.
Yeah, I went in. I mean,
Okay.
I went in and I got my education that way. There, in hindsight, there was no mentor.
Right.
There's very few mentors, formal mentors that are actually doers in the space, and that's still true today.
Yeah.
And so, you'll find mentors that just teach. But I wanted a mentor that actually is,
Yeah.
rolling, is
That's the
balling.
story about all the gurus, mostly in because I try to do multifamily. Most of those gurus, they just want to get money or make money from the training and education side. Yeah,
Yeah.
but not doing the actual, investment. So yeah.
Absolutely. So I got burnt on those loans. I took back a lot of the properties. I became what is frowned upon in the industry as a long distance landlord.
Oh, yeah.
And long distance landlords were their one-offs. Obviously long distance landlording where you have a strategic area that you're operating in and build teams in those areas. I get all that. But when you own a note, in this part of the country and own a note in that part of the country, and they're just one-offs everywhere, then on crappy properties, then you really get kind of caught poorly. But I learned a lot of valuable lessons from that first purchase.
See, that's very important. The two things I could gain from our discussion now. One is that you like to take action like me, so you jumped in. Second is Ohio is a worst place to start because I got burned my very first investment. So I'm never doing that again. No, just jokes aside.
Yeah.
But yeah, that's another way to educate yourself, because people just get stuck in the process, that bigger pockets, these, that will keep learning this book, that book, and they never take action. Then they talk about, oh, I want a mentor, but they look at 20,000 price tag and they don't do it, which is right. But I would be like, yeah, use that 20,000 to invest. You will get educated one way or other.
Yeah, absolutely. It's interesting. So, sometimes it's the presentation of the mentorship. So if you go to like a franchising convention, and there are companies that may sell you a franchise and to go set up doing shipping and packaging for
Right. Yep.
people like a UPS.
Yeah.
And they may say, give us 200,000 and we'll train you and blah blah blah, and they present it well. And
Yes.
so, but you're never going to make that much money in doing that. And I'm not saying anything on UPS. I'm thinking of another smaller franchise, but at the end of the day, if you find someone that is highly successful, and I'm talking, owns millions of dollars in the asset class that you want to learn how to buy, then that 20,000 doesn't seem like as much money. But if it's 20,000 for someone who's just a professional teacher, then it's probably a lot of money.
Right, exactly. No, I totally agree. So let's talk about not investing, because you had to become a landlord, and in my world, because I own real estate directly, right? It's very easy to be a long distance landlord. That's how I started pretty much. Even though at first I owned a property here, but then since 2015 I just started doing long distance landlording. But how risky is not investing?
So yeah, I chuckle because you're in California, so long distance landlording
There is no
is
other
in your
way.
DNA. Or you go to Fremont, right?
Yeah, that thing is, yeah, you got to still be long distance. There is no.
So actually, California is one of my is one of the states I'm highest on. So we own a lot of California mortgages.
Oh,
And
nice.
and so it's interesting because I'm out of your state. I'm in Florida, but I buy into California. You're in
Which makes
California
sense.
buying out of it. But from the perspective of I purchased two types of asset classes within note investing. I purchased distressed notes and I purchased performing mortgages as well. And the key is that I purchased these notes within the secondary mortgage market space. So that is, the loan gets originated at a bank like PNC, Wells Fargo, Citibank. And at some point, these notes go into default. And then they get bundled into tranches and they get sold into the secondary mortgage market space, which is essentially like a flea market where there's hedge funds buying and selling mortgages. And so that's how our company operates. We have one arm that purchases distressed mortgages. We've purchased about 20 plus million over the past 12 months.
Oh, wow.
And then there's another arm. We have an income fund, Bequest Funds, which houses only seasoned performing mortgages. And we purchased maybe 5-6 million in the past 12 months on that bucket. So we're active buyers and we have relationships in place by which we lean on for inventory.
Oh, that's great. What has been your best real estate deal so far? Other note.
Yeah, I'd say August of last year, we purchased maybe about $5 million of mortgages, half of which were in California, and we did extremely well.
Oh, wow. Okay.
Yeah, yeah. California is a great state to invest in. Most of it's non-judicial.
That's where I
You
was
know,
going to say that when I learned about note investing, you got to look at judicial and no, or non-judicial. And because I was
Mhm.
working with American Home Preservation, I think you may know George Newberry.
The name sounds
Yeah,
familiar,
yeah,
but they do
he's
preservation across the U.S.
yeah, yeah, and they buy. I think they have bought over 100 million or more than that worth of notes. So I was trying to learn from his some of his boot camp, and that's what I learned. So California is better that way, and yeah. So
Yeah,
how
you have
how did you
equity
make that
spikes.
deal, and how
What's
how
it?
did how did it work out? The deal you said the deal was pretty good.
Yeah, I mean, non-judicial, you're gonna work out terms quicker with the borrowers. Loan modifications, payoffs, and reinstatements. So yeah, I mean, we've gotten pretty much through that whole portfolio in quicker time than we had anticipated. And but we purchased a few $1 million worth of assets every 2 to 3 months. So we're continuously buying, and so that's what note pool is the best. It's probably the one that that I have the most workouts in. But yeah, notes in general have been incredible for us, especially given the marketplace. Everyone feels good, borrowers feel good. Based on COVID, people are tied to their homes. It's completely opposite from what the media is portraying about people shouldn't pay their mortgage or people aren't paying their mortgages. People actually are at home more than they've ever been at home. They're appreciating their property.
Oh
So we're seeing
yes,
the opposite.
I am seeing that all around me. So yes, the people who used to commute 3 to 4 hours a day, finally they are able to enjoy their properties, right? So
Mhm.
I tell my friend when they complain, oh, we can't go out for the entire last year. I'm like, you guys have a nice place to stay, right? Enjoy. Finally, you just don't come there to sleep, right?
Yeah, yeah, yeah. And then you'll be a good Californian and move to Texas eventually, right?
Let's see. So I read your book, and this is one of the question I had because I know. But what are some of your other income streams?
So, gosh, I mean, I have 5 books that are selling on Amazon. I have a few online courses that are pre-recorded, so those generate, cash flow. I have own hundreds of mortgage notes that pay every month, and so those are hundreds of streams of income. I own, a handful of properties that cash flow for me on a monthly basis. And gosh, I think that's about it.
So that's awesome. So you have built enough multiple streams of income. Even in real estate, you are diversified, being landlord as well as hundreds of notes. So that's awesome. Let's take
Yeah.
a quick break, Martin, and after the break, we'll go through the same questions I ask every guest.
You're listening to the Wealth Matters Podcast.
The Wealth Matters Podcast.
For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Martin threw some value bombs from government contracts to real estate note investing. So that's awesome. Martin, are you ready for a fire round?
I'm ready, Alpesh. Give it to
Let's
me.
go. Let's go. Would you be changing any business or investment strategy after this pandemic is over?
No, I'm looking to purchase as many. I'm going full steam ahead. I'm looking to purchase as many mortgage notes as possible, especially on the distress side, because I think inventory is going to be dwindling over the course of time
Mm-hmm.
as all these borrowers are coming to the table and paying off their mortgages and whatnot. So it's really a mad dash to increase inventory right now.
That's awesome. Favorite real estate or finance or any other related book other than yours and mine?
Yeah, absolutely. So there's a book, I think it's Matthew Burke, it's Capital Attraction. I read
Capital
that recently.
attraction.
That's a really good one. Hunter Thompson writes a
Oh,
book, good
yes.
book on capital raising. The Godfather, Robert Kiyosaki, how can you
Yes.
not love, I like Cash Flow Quadrant
Cash
more
Flow
than I
Quadrant
like
is the
Rich.
best book.
Isn't
Yeah,
it? Yeah. I
that's
mean, that just
awesome.
lays it out in a way that even I can understand.
Yeah, yeah.
I mean, it's so great. And yeah, those are probably a few of the ones that inspire me.
So I need to read Matthew Burke's book. But yeah, Hunter and I are good friends. So yeah, I have Hunter's book as well. That's a
Nice.
great book. Any tool or website you recommend or you cannot live without, maybe even while you are analyzing your notes, if you are using any tool or website?
So we have all proprietary software that we created in house, and to go through the process. The one thing I would strongly recommend, because there are due diligence softwares out there to vet mortgage notes, is to be extremely careful. I really believe that one should go through the process with like the long division process and just do it themselves step by step, whereby they're absorbing the knowledge versus letting a computer automate the process, because you really uncover at different aspects of that note when you go through like going through the website, reading the comps on the property, reading the credit report, and internalizing the results of that and getting a glimpse into the borrower's life. Skip tracing, reading through comprehensive reports, reading through the title reports and understanding the chain of title, understanding ownership, any encumbrances. One really needs to learn that by just doing and going through it repeatedly over dozens of notes, versus just going out and buying a software that would just be my only recommendation.
Got it. Any advice for beginner investors?
Yes. Only start a business if it's scalable. You need to build for scalability out of the gate. And especially in this day and age, on the note side and probably on the real estate side too, mom and pops are getting crushed. And the ones that are doing well are the ones that are building out teams, whether the teams are virtual or together in a single place, and everyone's doing their part, and you have the room to grow. Versus capital raising, due diligence, and in terms of asset management, you're able to grow in all the facets of the operation that you're growing in. So scalability is one, and also only investing in assets that cash flow and you have control over. So for many years, I was just focused on appreciation, or I was focused on kind of a long-term play. Not anymore. Right now, I got to understand, when is this asset going to cash flow, and to what extent, and what's that return that's coming back to me as a result.
That's great. How do you give back?
I'm sorry?
How do you give back?
So in 2013, I built a relationship with God, and I changed my whole focus from being focused on dollars and cents to service to others. So I'm doing podcasts like I'm on with you. I'm writing books. There's a number of people that reach out to me on an ongoing basis. Nobody ever knows that. I'll go and give help, give support. I run some mastermind groups. I mentor a few people every 6 months, just a few people. And really, at the end of the day, the borrowers that we serve, we help keep them in their home with giving them payments they can afford. And, while it profits our business, yes, but we're still working diligently to help keep them in their home and understanding their financial situation and really working with them. So that we're giving back on that level, plus giving them, rock star service, as they are our customers at the end of the day. So my whole world, I feel, is based on service. And the more I grow it, the more I could be a model for my children. And hopefully one day they'll work in the business with me and build on this legacy play.
That's great. How can my listeners reach out to you?
They can email me at martin@bqfunds.com, and I'll send them a free ebook. And that's martin@bqfunds.com.
Thank you so much, Martin. I thoroughly enjoyed our discussion.
Thank you. Thanks for having me. I enjoyed it as well.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!